Well, as the market starts to price in the idea of a red sweep really becoming a reality in the situation, we're seeing all-time highs in the NASDAQ, in the S&P, in the Dow, and the Russell has absolutely flown with regional banks up 13%. We've got crypto absolutely mooning. The US dollar is flying with all currencies except perhaps the Brazilian real and the Mexican peso. Gold's under a little bit of pressure as yields move higher, and we focus on the idea about what is the straw that breaks the camel's back when it comes to yields and term premium and various factors. There's a lot going on in markets as we look ahead towards the Bank of England meeting and the Fed meeting. Let's get it on. Hi there, I'm Chris Weston from Pepperstone, and we're joined in 2 seconds by Blake Moreau from Forex Analytics. It's been a crazy couple of days in markets, and I think it's going to continue to be so for some time as the market settles down and tries to find a fair value and understand what this all means going forward as we try and price risk going forward. But Mr. Blake Moreau, please come into the program, make sense of this crazy topsy-turvy world we've been seeing. A red sweep, it's cometh this way. How have you actually been trading this? Have you had any sleep over the last 24 hours?
I've managed to have a couple hours of sleep, Chris, and I admittedly tell you I'm extremely tired, but it's been good. I mean, the markets have been great. The dollar is ripped. We've seen yields rally. We've seen the stock market break out. As you pointed out, Bitcoin, crypto is moving. Even Dogecoin is moving. I mean, it's been a wild market, and Trump just came through and just performed better than anybody expected. And now we face the possibility, as you pointed out, of a red sweep. They're still counting the votes in the House. I mean, there's a lot of seats there, but it looks like that we might get there.
Yeah, it looks that way, doesn't it? Certainly some of the networks are saying there's a 95% probability of the House going off, and we're seeing markets react emphatically. So, look, I want to give a big up to Michael Brown as well, who pulled an all-nighter for the election. So, the man loves his politics. He loves his market. So, big up Mr. Mikey Brown in that situation as well. But yeah, let's go into the markets and let's discuss exactly what's going on and try and make sense of this crazy world. Okay, Blake, we can't really go past. We have to start with the US election. Obviously, I know people are sick and tired of talking about it. We obviously have a result with the president. Let's not talk too much about that, but let's talk about the market reaction rather than what we've been seeing. As you point out, we're still waiting to get confirmation of who gets the House. At the moment, the networks are saying there's a very high chance that the House does go to the Republicans, and therefore we are going to see a sweep. I think the market is emphatically suggesting that they're pricing for that. It all really kicked off with Florida, and we started seeing the dollar move up. Yield started moving up. Obviously, Georgia, Trump was polling better in the first swing state there, and then it was on from that point. I think in terms of the U.S. equity move, I can't say I was expecting to see the magnitude that we saw in the Russell. Regional banks, the KRE was up 13%. The dollar's flown against everything except the Brazilian real. They just raised rates in Brazil, 50 basis points, and also the MEX, which is a surprise. Let's talk to you about the emphatic moves. How are you seeing that?
Well, waking up this morning to all-time highs in the equity markets, it didn't really surprise me based on yesterday's response or last night's response to Trump. So waking up this morning, I was like, wow, okay, we're up here. That makes sense. But you're right, that Russell 2000, we brought up that chart a couple of weeks ago and saw that nice little wedge. And I know I brought it as a setup, break out to the upside, break out to the downside. There's your levels. Well, it broke out to the upside because it was a bullish wedge and it looked like it should break out to the upside. So that happened. And how I'm going to trade it now is, you pointed out, the sweep. So these are the types of things that you have to look at the number of seats that the Republicans have. Yep. And I mean, I think the number is 218. Correct me if I'm wrong. Is it 218 or 280? I have to go back
to get the House. Yeah, that's right.
Yeah, to 218, right? If I have that correct. We're not that far away. There's a lot of states like the state of Arizona that might take a couple of days to get through the votes, but that could happen overnight when this is all overnight, no matter where you're at. So you got to be careful because we could see a continued move in the dollar. We could see a continued move in equities. I already think that we are going to see a continued move look, we're in a seasonally into a period of time where asset managers are probably going to start chasing the markets higher at this stage. So that's probably what's happening right now, and it's probably going to continue.
You could make that argument as well. You've got Nvidia still to report. I think 23rd or 23rd of November. Do we buy tech into that? Yeah, then you go into December, and the market's up so much this year that active have to chase. So you can make I think what you're saying clearly here is buy US, buy risky assets in the US. Credit spreads have come in 18 basis points on the high yield CDX. The S&P is outperforming. We'll talk about some trades there, but you can make a clear case now. Whilst yields are something we can talk about right now, people are switching out of Europe. People are switching out of China. They're going into US equities, into small caps, into banks. The dollar looks like, I agree. I think the dollar's got further upside here, and so this buy US on a sweep on fiscal. He still needs to pass it. There's a lot of fiscal hawks, conservatives in the Senate, the Tea Party movement, for example, who are not going to allow such aggressive deficit spending to come through. But the market's pricing in that we are going to get a lot of these measures put through, right?
Right. And so let's talk about yields. Let's shift gears. Yeah. And I'm going to ask you the question here in a second, but where is the breaking point? And I don't think we're there. And I think we still have further to go. If you look at just look at yields, just take a view of a couple of years. I mean, 10-year yields are breaking higher. Yes, we're seeing this move higher. Bonds are under pressure, despite the strong 30-year auction that we had today in the US. I don't know where the breaking point is, but this yields move, it seems like it's real, along with everything else that you're seeing. But there's got to be a point, Chris, and some of my colleagues are starting to say, hey, look, the 10-year, before you know it, we're going to be trading back at 330 in the 10-year. And I'm like, I don't know if I see that. So I guess I wanted to pass it over to you and ask, where is the breaking point in the market? And do you trust this move in yields that they're going to continue higher?
There's two ways to look at the move in yields. There's a good move and there's a bad move, right? If the move is driven by better growth and better dynamics like that, fine. The equity market can absorb it. But if it's driven by inflation expectations rising, if it's driven by increased supply, then the equity market won't like that. And that's where we start drawing a line and saying, where is that line that the equity market says, hey, this is not good? And I agree, we're not there yet. We have seen inflation expectations move up a little bit, but it's not at concerning levels because the Fed will look through a rise in the price level that comes from tariffs. They did that in 2018. They did that in 2019. And they said, look, this is a one-off shock. We can look through that. But it's like when inflation expectations in the market start to become unhinged and start to rise, that's where the Fed would start saying, hang on, we can't cut rates here. This is not a good situation. And they may even start becoming a little bit more hawkish at the margin. But we're away from that sort of situation. So I think at the moment, the market can absorb higher yields. But if term premium rises, inflation expectations rise, then there will be a level where the market says, hang on, this is not good for risk. And you will start seeing a drawdown and expect something from the Fed. But I think, what we will see is interest rate sensitive areas of the equity market under pressure. We
already are.
Yeah, well, that's right. So your REITs, you'd be short REITs, you'd be long, more sort of confined areas. Tech doesn't seem to mind, even though they are a duration asset. But we've seen that last night. What worked last night were banks. So stay long banks. The banks love high yields, steeper curves. They can lend at higher rates, increase their margins. So, I think whilst the broader equity market may find some headwinds, there are going to be some sectors within, if we were to see yields moving up, then there are sectors, stay long banks, short REITs that can work quite well in that environment. And of course, for us, Blake, stay long the dollar.
Yeah, and that's and I'm gonna just sit with this for a second. And I know you need to. We're going to be moving on to the next subject, which happens to be the dollar. But we also need to talk right after that. We're going to be talking about central banks because, look, the presidential election was not the only game in town this week. And there's a lot happening over the next 24 hours. So, Chris, I'll let you take us into the next subject matter. Yeah,
well, let's go into the US dollar then because, let's not talk too much about the MEX and the Brazilian real because we see huge flows on that. Although, the MEX is still a really interesting because that was supposed to absolutely, dollar MEX was supposed to fly on this result. But, we'll see. But dollar yen nicely above 154. the dollar index actually was just beautifully correlated to the move in the 10-year last night. So, whilst the dollar was always going to be the cleanest expression of the US election, the most obvious expression, really it just moved tick for tick with the 10-year overnight. So yeah, again, it sort of backs this point, get the 10-year higher from here in terms of yield, and the dollar goes with it. But yeah, I mean, look, certainly 154, Bank of Japan now, they're going to be looking at this. Dollar CNH has ripped. How the PBOC going to fix the midpoint of the yuan fixing today? They could push back on that. Euro dollar. I know that you're heavily involved in euro dollar. You've got some charts on that later on. But for me, when you've got yield spreads widening out, fiscal coming through, we're trying to model what fiscal looks like. Right now we're in this kind of hiatus. Trump looks like he's going to get the red sweep. It's a high probability. We're in this process now, Blake, of trying to model what this looks like. And we don't have that clarity at the moment. We don't have the clarity on how emphatic he's going to be with tariffs. If he's going to put through tax cuts, if he's going to get through other fiscal measures, he has to use tariffs as a revenue raiser. And that's much more aggressive than had he had a split Congress. There's all these factors that we need to model. We know they're coming. There's a good chance they're going to come, but we need to see what that future looks like now. What does that mean for growth? What does it mean for the consumer? And that's the thing that we're uncertain. So we price in an assumption first, and we'll either pedal it back or we increase that. But we're in that process now of trying to model what this looks like on the dollar, and we don't have huge clarity, right?
Yeah, we don't. And your question is, what stops the dollar right now? I don't know if anything does right at the moment. And technically speaking, and I will go into this a little bit later, but you look at where the euro recovery stopped today. It stopped exactly where it was supposed to. And don't worry, stick around because we're going to go into those charts. But yeah, you look at I guess one of the surprising things to me right now is how well the Aussie, the Kiwi, and the Canadian are acting. Maybe that's a nod to risk appetite that we're seeing in the markets, but they are outperforming at the moment. I'm not sure if that's going to last, Chris.
Well, we'll see. I mean, yeah, I think the Aussie, these China proxies are really, really going to be interesting because, we can talk about it another time, but you've got the NPC meeting in China, the committee meeting coming through tomorrow, right? And whilst they have to act on facts, and we haven't got that sweep confirmed yet. Looks like it's probably going to happen. But in that environment now, they are now staring, and they'll be doing their homework and saying, what are tariffs going to look like on our economy? How do we incentivize capital to stay in China? Because for them to get this fiscal rollout, to boost animal spirits, they need money to stay in China and not make its way over to the US, which is what we're seeing. And they now need to come out hard, and they need to please the market tomorrow. So that makes being short Aussie and the China proxy somewhat more convoluted, because the PBOC and the Chinese authorities now need to come out and deliver the goods. They've got probably the worst case outcome coming to them, and now they need to hit the market pretty hard, which means
they need to hit. This is a whole other conversation. They need to hit the market hard, but how do they approach fiscal? Like, do they approach with household, the real estate, factories, building? I mean, that's a whole mess, and you're right. It's like a huge mess that's just been dumped onto them. And I wouldn't want to be.
That's the next big thing for me. It's the next big thing.
Anyway, that's next week. All right, let's talk about, again, I forgot yesterday. What happened yesterday? Because I'm a trader and I have ADHD. Tomorrow, we actually have 4 central banks meeting. We have the Riksbank, which could surprise with 50 basis point cut. I don't know about that. We have the Norges Central Bank. We have the Bank of England, and then we have the Fed. And so I got to ask you a couple questions here. So first of all, do any of these central banks matter to you tomorrow? That's one question to you, because I do think that the Bank of England, after following their budget, I know Ryan talked a lot about it on the UK trade-off. I'm wondering what the Bank of England is going to do tomorrow. And then the Fed. I mean, does the Fed just go on cruise control at this point and they just start cutting 25 basis points until when? Until inflation expectations start to rise? And then do they have to shift gears? I mean, what happened? And what happens to Jay Powell?
I think Jay Powell's pretty safe for now, to be honest. I mean, I think the noises that we've been made is that he's pretty happy. And look, Trump's loving this right now. He goes into these negotiations in a position of power, or at least he thinks it is. The US is in a relatively strong economy. If you're going into a negotiation period, you want to have you want to have that economic leverage behind you. And he's sitting there going, we've got a central bank that's cutting rates. Great. We've also got a strong dollar. We've got a better economy. He's feeling that he's going to be in the driving seat when he goes into these negotiations. But look, I think Jay Powell's pretty safe at the moment. I think, for the Fed meeting, they'll cut rates tonight. That's done. The conjecture is about December, and I think Jay Powell will have to be. I think he'll sort of give off the impression that they're still willing to go in December. They're going to be data dependent. That old line, but the market's sort of torn. There is a sort of just less than 50% chance they cut rates again in December. So, that's been priced out. What we've also seen really importantly for the dollar is that the trough rate for where the Fed is expected to cut to has come to about 3.86% on the Fed funds rate. So that low point, continues to rise, and therefore that the market is saying that the cutting cycle is going to be shallower, and again that's supportive of the dollar. So, I think we go there. That there's a good chance they cut in December. It's going to be dependent on the next payrolls number, of course. I'm not really too interested in the Bank of England. They'll cut rates, and again December's going to be a point of conjecture. But I think that the moves from the Fed should be pretty well contained, given that we're still waiting to hear about the red sweep. Let's go to and have a look at the charts. Let's go to that's the setup. All right, I'm going to go this the old classic buy US and have a look at a chart of the ratio essentially between the the Euro stocks and the S&P 500. I've actually, just to make sure that you take the currency effect out this, because people say, Euro stocks is priced in euros, the S&P is priced in US dollars, of course, and there's a currency effect between the two. I have used this and put the Euro stocks, the Euro sort of benchmark there in dollars. So comparing apples and performance with performance. But you can see there that the S&P is significantly outperforming. That's the denominator. So the S&P is going up relative to Euro stock. So what we're seeing here is this now is testing all-time lows. If I could have taken this chart out to 2000, and you can see that there is a steep downtrend. So for me, the US markets here are clearly outperforming. You could look to the Dow, DAX, whatever you want to look at. But the fact is that the European markets are underperforming that of the US, and it's a beautiful downtrend. So this is a pairs trade that I love. I still like to, even though we're at all-time lows and people don't like selling stuff that are all-time lows, buying stuff at all-time highs. There is just a ridiculous trend here. So being short Euro stocks, being short the DAX, and being long any of the US equity markets makes clear sense here for me.
Chris, you took the words out of my mouth, and I almost brought the DAX chart to say the DAX is dead again. Just kidding.
I don't know if it's dead, but it's dead against the US markets at the moment.
Yes, it does look like it. We're going to see a little bit of pressure. Anyway, hey, let's go into my first setup, which is Bitcoin. I mean, how could it not be Bitcoin?
How could it not be?
It is breaking out to the upside. Look at that. That's a big cup and handle pattern. I know we've talked a lot about it. By the way, that cup and handle pattern, just from a measurement standpoint, you can't see it here. It does take us above 100,000. I know a lot of people have, they call it, there's flag patterns that go further. And I've been looking at this just big consolidation, and any which way you slice it, while we're above 74,000, Chris, it looks like we're going to 80,700. That's 127% extension of the quote unquote, the handle, if you will. And that seems pretty logical. I mean, everybody you talk to is going to be long Bitcoin. They want to get long crypto. They're buying crypto. They're putting money in there. Now, there is always a risk of a buy the rumor, sell the news event. Always a risk of that. I wouldn't be so worried about it in crypto unless you start getting back below, like, let's say about 72,000. You get below that, then you have to be careful. It's hard to look at breakouts like this and not just go blindly into it, but you also have to have some sort of risk management. Anyway, this breakout, real
it's
to
a
me.
great one, and for the traders out there, do you chase this? I mean, it's so hot that you can't short. It's hard to short, but it's also so high that you don't really want to go long. But I think there's all these white studies that you buy these markets at all-time highs and you do pretty well out of it. So it's here for a reason, and the fact is it has diverged from gold, which was supposed to be a part of this kind of debasement trade that everyone's been talking about. So crypto looks pretty good at the moment. I think this is hot, and it probably stays hot. Let's go to $CNH, the offshore yuan. And I brought this up. We don't see a huge amount of business. People don't, retail sophisticated traders don't really trade $CNH, but it's had a massive, well, it had a big move. Certainly not the same sort of moves that you see in dollar yen and other factors, but it is a lower beta move. Now, the interesting and tactical part of this is it does read through into other dollar pairs. So dollar CNH does have a big influence on the euro dollar and Aussie dollar and other pairs as well. So we are watching this one closely. We're watching the PBOC fixings at 12.15. They come out and they will massage the onshore yuan's midpoint, and they will push back against the weakness we're seeing in the yuan. That said, there's an element of people that says, hang on, in 2018, 2009, the PBOC depreciated their currency by 11% to offset the tax that came through. Now, if Trump's going to raise tariffs to 60%, that's a 35 percentage points increase. If they depreciated the yuan in 2018 by 11%, when tariffs went to 10% and then 25%, what are they going to do this time around? So that's what makes this cross such an interesting cross. Do they push back on there to try and keep capital in China, or do they depreciate the yuan over time to offset the tax that's going to be implemented on their imports to the US, or exports to the US, should we say? So this is what makes this cross so interesting. But if we were to see dollar CNH start to really trend, and the PBOC having to push back on a daily basis, that dollar strength is going to manifest into dollar strength in other pairs, and this is going to be at the backbone of that move.
All right, Chris. Yeah, and for you keen eye chart technicians, yeah, that is an inverted head and shoulder pattern. Does
there you go.
Suggest a little higher. Now, my last setup is going to be gold. You know, everybody's been asking, Chris, when are we going to get a pullback in gold? We can't buy it because it's too high. Well, yeah. Here it is, and here it comes. And look, we're not too far away from the 50 DMA, and you have to imagine that the 50 DMA is going to, if we break below that, it's going to offer, or it's going to allow for some selling to come in, systematic selling to come in. You look at horizontal support back at those lows in middle of last month, or are we in November? Yes, we are in November. middle. Boy, it's just time flies, buddy. The low
in that cave, brother.
Yeah, exactly. That's around 2,600. That horizontal line. That's at the 38% retracement. So imagine like stops getting triggered below there because everybody gets blown out of their longs. Well, you guys now see there's a nice ascending channel. That support comes in right around 25.60. And by the time we get there, by the time price gets there, could be more like 25.80 because it is a rising trend line. So I guess the setup here is let those stops below 2,600 get blown out. See if you can get on the bid just below that. That's been something I've been looking to do over the last couple of weeks, and it looks like it's coming to fruition now.
Well, I'm glad you brought that up. But, gold's been rising in a strong dollar environment, on a rising yield environment, and maybe maybe we're talking about earlier about this idea that when equities start to face headwinds, well, maybe gold's just found that headwind, and finally we've got that liquidation playing through. But yeah, price is the price. Do we start seeing it bottom? People have that flush out of an extended long position. That's what's going to be an interesting. Yeah, that 50-day could be a good trend filter, so we'll see if it holds. But yeah, great chart for bringing up. Thanks, Blake. Anyway, let's go to play of the day. I'm a crypto bro today, so let's bring up Uniswap. And I just love this. You brought up Bitcoin, and Bitcoin's all-time highs. You can't get any more bullish than all-time highs. We're seeing massive inflows into the various ETFs. Huge volume on the iShares ETF there. So yeah, obviously people feeling the love, and you've got the talisman essentially of the world's. The leader of the world's most largest economy championing your corner. That's a pretty bloody nice place to be, I think. And tailwinds are obviously ripping from there. What I like about Uni, though, obviously it was one of the bigger percentage movers on the day, up 30%. We like that, so you get that high beta move, less liquidity. It's easier to move price up. But I love the technicals on this. We moved in a slightly positive trending, but sideways consolidation pattern really since August, and we just absolutely ripped to the upside. Huge range expansion, closing on the highs of the day. Got to love that situation. Now, what do? Do we rent it? We come back to retest that former breakout range high to confirm that is now support, and we use that then to sort of lever off into long positions, or does this now just kick? I favor this just as a breakout and a sort of momentum strategy. You don't know how far this can go. It could continue to trend. I like buying this right now, but there'll be people out there looking for the retest to confirm that. But I think this is one now. Any kind of pullbacks, buy into. I reckon this kicks, and there's a good chance that this goes on a bit of a run.
Kick the kicker. I like it. All right, Chris. My play of the day is going to be the euro dollar, and you're talking about buying breakouts, selling breakdowns. There's a lot of people in the Forex analytics community that saw that 38% retracement, that bounce ahead of the election night. We were trading literally at 109.35 26 hours ago, I would say. And since then, we have dropped below support, below a trend line. And look, this is a big range. You look at the range. It goes from 105 to 112. That's a simple ABC, AB equals CD move, bear flag pattern, however you want to look at it. It suggests that we go to 105 or the range lows over time. And that makes sense to me as long as we stay below 108. The reason why we can measure it that way is because it did stop at a 38% retracement. The bounce was shallow enough to give us an extension to complete an AB equals CD move, which once again, while we're below 108, Chris, and we stopped right at, like I said earlier, we stopped at 107.60 today and reversed. It was like actually 107.52 or 53. And I shorted the euro up there. So I'm already in it. I'm looking to add. And look, while it's below 108, I think we just continue to sell rallies. So there you go, Chris.
Well, look, what we've been seeing is a lot of people wanting to stay out of the US election just to hold out until we got confirmation and then react. And that was probably quite a prudent way to do that. We saw some pretty violent moves as the election cycle wore on. But I think we've got some clarity now. The question is what happens in the future and how do these policies get enacted? How quickly will they be passed, if they're passed at all? And obviously, we've got to wait for the sweep. And how do the countermeasures come in from other countries as well? There's a lot of questions still to come. We're in that process now where we sort of price an assumption and we pair it back depending on the reality of the situation. So markets could stay volatile for some time. We'll have to see, but that's going to lead to some pretty bloody good trading conditions for us short-termisms. Anyway, Blake, thanks for getting your thoughts. Stay safe out there, trade well in these markets, and we'll see you back next week for more of the trade-off.